All right, I think we are at major turning points in a lot, if not most, asset classes. One of the things that kind of helps me track this is when retail money, kind of dumb money, they're not inside the financial system. They don't work at J.P. Morgan or the big banks, so they don't have inside information. And generally, these kind of people trade based on what their emotions are telling them to do. They are trend followers, but they are always late to the trend. So they are buying the trends when, after they've been going for quite a long time, usually many months. Then their emotions tell them, it's all clear, and that's when they want to start buying or selling short. And then they end up getting caught at these major turning points, tops and bottoms. So I'm pretty sure that's happening right now. So I'm going to give you an example. This is Bitcoin. Back in here, I warned people that Bitcoin was a bubble and that it was prone to be in the end stages of the bubble and it was going to pop. And of course, retail traders, nobody listened to me. And then we got the warning shot across the bow, this first big decline that erased about 50% of the bubble. And traders rationalized that this was normal for Bitcoin, that it always goes through these things where it loses a big chunk of its value, but it would come back. And I agreed, and you can see in my videos, I noted that most bubbles they'll almost always, to some extent, they'll retest this top because the buyers that have been rewarded for buying the dip will show up. And so almost always you'll get some kind of a retest or a double top. And that's what we got here, was a double top. And I warned people again right here. I said, bubbles will very often double top before they collapse in earnest. And of course, at this point, everybody was looking for 100,000 Bitcoin. They wouldn't listen to me. Now the bubble is popping in earnest. And so this is just an example of what I'm talking about. The retail money, they just do not have insider information. They trade based on their emotions. They are trend followers, but they are always late to the trends. So they end up getting caught at these major turning points. And now I will say, I think we've probably put in an intermediate bottom here in Bitcoin, and it's going to rally for a while, but I don't think the collapse of the bubble is done. These can take many years to grind along at the bottom before they get any significant upward traction. So while I think Bitcoin probably did put in an intermediate bottom here, I don't think it's ready to come back up and go back above 70,000 anytime soon. So here's where I think retail traders are. All right, this is the Dow. Clearly, everybody knows that the market is, we're in a bear market, which we are, but everybody knows we're in a bear market. Everybody knows it's going to continue. Everybody knows that a recession is coming. And when everybody knows something, usually the insiders, the traders that, at J.P. Morgan, Goldman Sachs, like I said, they have better information than retail traders. And more often than not, when I see retail traders all assuming the same thing, and then I look at what the smart money, the banks are doing, it is almost always the completely opposite. And so I think retail traders are wrong. We are going to have a recession, but I don't think it's just yet. And so I think that this is a cyclical bear market, not a secular. I think this cyclical bear market is probably over. And I'm going to explain in depth why I think these things in the weekend report. So, if you want to just keep making the same mistakes that retail traders always make over and over, then by all means just keep doing it. If you want to learn how the smart money thinks and get a more in-depth look of why I think these major trends are changing, I'm going to go over that in great detail in the weekend report. So anyway, that's the Dow. I think we've probably ended this cyclical bear market. All right, now here's the dollar. Again, everybody knows that the dollar is just going to go up and up and up. At the very least, it's going to test that major resistance zone at 120. And when everybody knows something, that usually means that the dumb money is trading on their emotions. There are signs here that this runaway move that the dollar's been in for the last year and 7-8 months is probably over. And if that's the case, then it means the 3-year cycle, the advancing phase of the 3-year cycle is probably done. And now we're ready to enter the declining phase of the 3-year cycle. And that cycle, since we bottomed here in the beginning of 21, it's not really due until the early in 24, even as far out as the spring of 24. So we may potentially have a year and a half of the dollar going down. And how many people right now think that that's even a remote possibility? I suspect that the traders in the big financial institutions think that. I think that. Retail traders don't think that. They think this is like Bitcoin. It's just going to go up forever. So that's the dollar. Now let me go to the next one. All right, this is the 10-year note, basically the bonds. Again, retail traders, everyone knows that the Fed is just going to keep raising rates until they crash the economy. And so bonds are just going to continue to fall and fall for the foreseeable future. And again, I think everybody is wrong. I think the Fed, I'm positive they're going to raise 75 basis points next week at the next FOMC meeting, but I think there's a very good chance that's the last one. Or if they do manage to raise in December, it'll be a marginal raise of 50 or 25 points, and then they'll be done. So again, retail traders have made up their mind. They've been conditioned by this just a relentless decline in bonds for almost 2 years now. And so they assume that the market can never turn and go back up, and the Fed is never going to change their stance. And pretty sure they're going to be wrong again. All right, this is the CRB. We've been in the declining phase of this 3-year cycle for most of the year. I think I covered this in one of my previous videos as well. I think, and maybe I explained this. If not, I'm going to explain it in detail in the weekend report. But I'm of the opinion that this 3-year cycle is going to run a little short. So there is a strong possibility that the CRB may have completed that 3-year cycle low right now. And so now is the chance for retail money to do the opposite of what they always do. They are trend followers, but they want to buy, here after the trend is run for a couple of years. This is where they feel comfortable buying. Then they end up getting caught at the top. The ideal way to trade is to buy before the trend gets starting. I think that's about to happen right here. I think the trend is about to start. And even if it isn't the beginning of the advancing phase of another 3-year cycle, I think we're ready to start at least a counter trend rally. All right, now let's move on to the big E, the one that the retail traders just always get wrong, and that would be, of course, gold. All right, so for metals, as I said, retail traders tend to trade based on their emotions, and nothing is more emotional for retail traders than the precious metals. So they always get this wrong. They never catch the bottoms. They're always buying late after they're finally comfortable. And granted, the metals are one of the more heavily manipulated markets on the planet. So, you know, they are warranted to be cautious with metals, because very often the cartel will run these attacks to fleece emotional retail traders in the metals. But the cartel is not going to stop the longer term trend. They can fleece you on the daily basis. They can fleece you on the weekly basis, and they can draw out these declines longer than they would occur naturally. But in the long run, they will not be able to stop the bull market. It is going to finish, and it's going to give us a bubble phase. I've said this many times in the past. $100 silver is going to be a piece of cake once we start the advancing phase of the next 8-year cycle. And I suspect $5,000 to $10,000 gold is also going to be a piece of cake. But of course, here's what's going to happen. We'll get our bottom. And again, I'm going to explain in the weekend report why I think we are either at that bottom or very close to that bottom in metals. And if you want to stop making these dumb retail trader mistakes, then you want to buy at the bottom instead of up here after you've let a year and a half of gains evaporate. And you're going to have a different strategy. Metals are still going to be erratic. I don't think you're going to make very much money trying to trade in and out of the metals, trying to avoid every little daily or weekly wiggle. Anybody, and I suspect that there's almost zero retail traders that could have bought at this bottom and just hung on for this entire move, would have made an insane amount of money. The problem is that almost no retail traders are ever able to do that. They're constantly trading in and out. And I've given my subscribers a perfectly good, in fact, a very good method for catching all of the advancing phase of the next 8-year cycle into what I'm positive is going to be a final bubble top that will give us those numbers, those targets that I just mentioned. Minimum $5,000 gold, maybe as much as $10,000, piece of cake, $100 silver, and likely somewhere between $200 to $500 at that bubble top. So if you want to quit making these retail trader mistakes, it's time to start doing the opposite of what everybody else does, and look at what the smart money does and try and get on that boat instead of just continuing to make these emotional wrong calls over and over and over. And now I think is the time to start doing what the smart money is doing.